Hey, what is going on, guys? Edward here, back with another video. This time I wanted to discuss something that you guys have been asking a lot, and it happens a lot. I will show you and I'll give you actually a few tips what you can do to continue providing this free information here to the YouTube community. I know you guys need this type of stuff, and if you're actually more interested in knowing a bit more of what I do, just recommend you checking the website, teamprofitsenglish.com. All right. Normally offer some really good discounts in there for the bundle that I'm offering. So, anyways, let's go ahead and get back to business. In here, you can clearly see I have two drawings, basically like a bearish scenario and a bullish scenario, right? Um, Sometimes we're going to have, again, I'm sorry that I'm repeating, but sometimes we're going to have scenarios where we see an order block, and at the same time, or you might think it's another order block. Sometimes we see two potential order blocks. They're actually not. All of them are actually order blocks. And normally, the one at the top is the one that is considered the actual order block, depending on the formation. Let me just start drawing here, and just so you can clearly see what I mean. So we have the market going to the downside. We have some inducement here. We have another inducement in this area right here, clear inducement, right? Before actually the price now breaks this low. But look at what happens like before the price actually break this low and creates this break of a structure, right? Boss. What happens? The market just don't simply go like that in a single straight line, right? No. The market actually does have an aggressive sell. I'm sorry, I went too far. It does have an aggressive sell, right? And then a minor correction, and then another aggressive sell. All right. In this whole part right here, this is where it gets tricky. And a lot of people are like, sometimes you can even see like three waves. Sometimes the market will give you another wave, like another correction and another break. So you're gonna have like three order blocks, and you're like, holy cow, which one should I take? Right? Should I take should I take this one right here, like this order block right here, or should I take the one at the top? Which one should I take? Because it's a lottery. It's literally a lottery, right? There are a couple of things you can do to refine and to make the best decision. But at the end of the day, remember, we don't move the markets. No matter what setup you have, you don't move the market. You don't move it. We don't. Okay, we're just, even though we're actually trading smart money, we are still retail traders. Okay, you're not a bank. If you're watching this video, I'm sure you're not a bank, you're not an institution, right? For sure. So you're still a retail trader. This whole concept of smart money is still, basically, is still retail trading, to be honest, right? Of course, there is some sort of force that is causing these huge big movements. Maybe is some institution moving it, yeah, or maybe it's just an algorithm, right? The market makers are making this type of moves, potentially, right? So we just follow, okay? It's impossible to know exactly where the market is going to bounce. Is it actually going to bounce right here at this order block? Is it going to bounce at the origin of this entire drop? We don't know. Okay, it's impossible to know 100% where the market is going to bounce. Accept it. If someone is telling you, oh yeah, I always get it, I always whenever I make my entry, even if it's here or here, I always catch it. That's BS. Okay, because that's not going to happen. Nobody knows. All right. So what we normally do to reduce the losses, to minimize this type of risks, is we use a couple of things. You can use the Fibonacci. You can use what this thing about. I'll draw it differently. Hold on. Discount, premium and discount, right? When the price gets to this discount area, right, which coincidentally this order block and this one right here, they both are in a discount area. So it's good. Sometimes the market may actually create like a third wave right here, right? You can ignore this one. Anything that is in here in this area from the entire push, you go from the top to the bottom. This is basically your discount area. So you're going to be looking for the order blocks that are inside. So you see what I mean? You are minimize. You're now trying to refine and ignore the ones that are outside, that are on the premium area. You're looking for the discount areas, right? So, anyways, you might have, this is actually a good zone to watch, and this is a good zone to watch. The market is not all the time going to react to the origin. Sometimes the market will react here, right? If you place your sell limit order right here, and you have your stop right there, and you have your take profit right here, you know, sometimes the market will just ignore yours. It will not go that up or that high. It will just literally just barely touch this one and crash, right? So at the end of the day, it doesn't matter. You don't know. We don't know which one is going to be taken. All right. We use our tools to try to minimize this type of risk. Okay. Still, I know some traders, you can still do it. There is no big deal with this as long as you're not risking your entire freaking account with one single trade, right? I know some traders, and I have done it myself. I actually do it from time to time. If I'm feeling very confident, I actually select both. I place two sell limit orders. If I lose this one, I don't care. The market will react maybe to this one or not. The market could even just continue pushing up, right? And I could get stopped out twice, right? I have my plan. I know what my plan is, and I know that I'm not going to be blowing my account with 2-3 trades, not even close to losing, 3-4% of my account and this type of thing. So you should know what you're doing, right? Based on this, you should know what you're doing. So I mentioned sometimes you're going to have a scenarios like this. In this particular case, the market just ignore. This is normally called a POI zone, aka decisional. Right? They have many names, right? But this is the decisional or a POI zone, and this is the origin. Why is this called decisional or POI? Normally, this zone is very attractive. That it's a zone that you cannot ignore. Why? Especially because look at the move, right? If you have two moves right here. You have an aggressive sell, you have a correction, and another aggressive sell, right? Which of these two moves was the one that caused the bust? Which one? Which leg? This leg, right? So it means that the move, this is my decisional, this is my POI, because this move was the one that caused the break, not this one, because this one did this, slow down right here, stopped, pulled back, and then another big drop. As long as you have a clear formation right here of an order block, right, very clean, you have imbalance, you have all your stuff right there, all your confluences. And the same thing here, sometimes you're going to have a beautiful order block, you have your imbalance, you have all your confluences right there. Still, doesn't necessarily mean the market will react in there. You can just touch this one and just gone. That's it, right? So just you have to understand that, guys. You have to understand that. So, in the same scenario for the buys, right? When the price is pushing up, okay, we do have an inducement right here. Hold on. We have an inducement right here. We have the market did pull back. It did also induce right here to the downside. It's basically the same thing, but now going to the upside. After the inducing right here, the price pushing up, and it did break, right? It did break this high, so that's my boss. But again, look at what happened. Like the market did not go straight up, right? From here, the market did not go straight breaking this right here. No, it did not do that, right? What you see, it's a one move, pull back, second move, right? So the market did create right here my decisional, right, aka POI, and I have my order block also right here, aka the origin, right, or of the move. The origin of this move started from here, of the break actually. So it started from here, but the move was not just one clean move. It did a correction, right, little correction right here before the move. So this is a very interesting area that you should not ignore. Okay, some traders This will depend on you, right? Some traders, what they do is they always ignore whatever is happening, whatever. They don't care about POIs or decisionals. They always go with the origin. They rather wait for the origin, and they only place their buy limit orders on the origin. If that's your plan, then stick to it, right? If that's your plan, if your plan is always make the auto block and make your only one position by the decisional and not the origin, okay, then make it your plan. Who cares, right? You are the ones who cares about what you're doing on your trading. It's your money what you're risking. Nobody else can say shit because you are risking your own money. So right here, if you want to just ignore this origin and you only want to take the origins, then take it. If you want to decide to ignore the origin, you just want to take the decisional or the POI, just take it. All right, just understand the probabilities, the possibilities of this thing. Doesn't matter what zone you have marked up, how many confluences you have in your direction. The market is not always going to go in your direction, and you're not going to be able to catch all the time or to guess all the time where the market is going to bounce. Is it going to react here, or is it going to react here, or is it going to react here? Because sometimes we do, as I mentioned, we do have maybe another leg. The market is dropping here, pulling back, and then drop, right? So maybe we'll create some other order block here. And guess what? Sometimes the market can even react in this one. And guess what? That is on the freaking premium zone. Then you might say, but hey, Eduardo was saying that the market should not be reacting at the premium zone. No, I mean, not necessarily. The market, we don't move the market. You don't decide. We just try to make this thing, try to look for the possibilities, better possibilities. If it's gone, it's gone. If the market did not touch this one or did not touch this one, only for some reason decided to react here, man, that's it. Let it be. Like, you don't decide where it's going to go. You're not the market makers. So anyways, let's go ahead and just show you some scenarios now on the charts, so you can see what I mean basically now on the candles. All right, in this scenario right here, you can clearly see how complex things start getting. You're like, holy shit, yeah, Eduardo is right. Like sometimes, in one single push, like where the origin is definitely right here at the top, right? But look at all this move. Like we do have an aggressive sell, right? A correction, right? Another aggressive sell, a correction, and another aggressive sell. Finally, breaking this thing right here, right? So market starts, doing its thing, the noise, consolidating, building up liquidity, right? Prices start and you are like, okay, I have the liquidity now right here form, right? Now I'm gonna look at the top, see which order block, and you are like, holy shit, we have one, we have two, and we have three. Oh my goodness, which one should I take, right? It is gonna be like that. You're gonna be like, you don't know. Yeah, like at the end of the day, you don't know if the market is actually gonna react on this one or this one or this one, right? In this case, what would you do? Are you gonna be making three positions right here? Let's see, like let's use the GAN box to see where we are, if we are in the premium or discount. So holy cow, coincidentally right here, that three freaking order blocks are on the discount area. What am I freaking going to do here, right? Guys, when you see things like this, you even have imbalance on each move. You have imbalance here, you have huge imbalance here, you have a much bigger imbalance here. So which one of this? You're going to be so confused, guys, on this one. I know, I get it. Man, if you want, if you want to take some type of risk, like whenever the market gets like this, not all the time, but whenever the market, you see like three formations like that, you're definitely going to have to make a decision. You can either ignore, you can just go with the origin, you can just go with the first one, you can go with the middle mark, Whatever I tell you right now, it's not going to matter because at the end of the day, it's your decision. What are you going to do? If it was me, if it was me, I would most likely, depends, as I mentioned, on what I'm seeing on the market. Also depends on what time you are like, what time is it? Is it Asian session? If it's Asian session, heck no, I'm not going to be making any positions, right? If it's London or New York session, I might actually be looking. What I'm going to do, depending on the time frame I'm located. Let's say in this case, I'm just giving you an example on a 1 minute. I'm on a 1 minute here. So 1 minute, you cannot go smaller than that, right? That's the smallest time frame. So there is no way I can actually zoom in. Let's say you were on a 50 minute or 1 hour, right? I would normally look for more confirmations. Okay, on the 1 minute, it's definitely a time frame where you cannot play with, like, you cannot zoom in right here. You either take the risk or not. That's it. It's more like more aggressive. But if you were on a 50 minute, let's say this was on a 50 minute time frame, what I do is I go right. Okay, I marked out the zones and I go into a smaller time frame, 5 minute, 1 minute, and I try to look for confirmations, right? I want to see the market actually slowing down in this area. If I don't see any type of slowing down, or maybe a second auto block, or something that is telling me that, hey, yeah, market might actually be reversing here, okay, then I might take an aggressive entry. But I won't be placing any sell limit order. When I see three things like that, and the three are very likely to happen, like all of them has, my goodness, all the confluences, and especially when the price is pushing up, you want to see liquidity. Remember, you want to see liquidity before you start making entries. So as long as you see the liquidity, I'm thinking about at least the market will try to hunt down this highs right here. It took already this highs. Now it may look for also this highs before it goes down, but guess what, ended up pushing higher and reaching the one at the top. So if it's on a 1 minute, if you're spotted this on a 1 minute, I would either ignore all this thing. To be honest, I will ignore. I will be more patient. I wouldn't mind if I enter a little late. I wouldn't mind, to be honest. I would just wait for some sort of rejections or some sort of like slowing down. But on a 1 minute, it's very tricky. Sometimes you just gotta take the risk and that's it. Maybe I could encounter some losses, yes. And even just think about it. Let's say you're risking 1% per trade, right? Maybe you place one sell limit order here, another sell limit order here, and another sell limit order here. You're risking 3% right here, right away. In this one, you're risking 3% of your account. So um, at the end of the day, the market gave you, if you finally hit this one, it gave you a 1 to 9 risk reward. So you lose 3 and you won a 1 to 9. I mean, you are nicely in profits. Now, if this thing decides to just go up and just continue pushing up, all right, you went down with it 3% loss. And that's it. You have to man up. You have to accept it. It is what it is, right? There's no way I could ever find out or know exactly which OB or POI, decisional, whatever, is going to be rich, right? There's no way. Let's go ahead and jump into another example. All right, in this scenario right here, we can see that, okay, the market had another boss right here, break of a structure to the downside. And we see the move, right? We see the market came aggressive from here, had a nice reaction, very aggressive. The market decided to consolidate for a little bit, and then another aggressive move, right? So we have our decisional right here. I'm sorry for my lines. My God, I have a pulse like. All right. So we had our POI or decisional, and we have our Origen at the top. Which one should you take, right? Again, if you go just looking for your confluences and you go and just, let's say, just draw your GAN box here, right? Both order blocks are actually in a discount area, so you are like confused, right? Oh my God, which one should I take? Do I have imbalance here? Yes, I do have imbalance here. I do have imbalance here. And you can make try to look for all your confluences, and at the end of the day, believe me, you would still be confused on which one should you take, right? At the end of the day, we don't know where the market is going to react. So depending on the time frame, again, what I would do If it's on a 1 minute time frame, there's nothing else I can do when it comes to time frame. That's it. I either take the risk here, and accept it. I can actually place two limit orders. I might place one here, or maybe at the 50%, to reduce. If you see that this order block is too big, just go with the 50%. It's up to you. Right? Every trader has their own different way. Right here, or select also the one at the top. Also, you want to go with the 50%. You want to go here. It's up to you. So you have two positions in there, and accept it. If it's a 1 minute, if you are on a 1 hour, 30-minute higher time frames, you always have smaller time frames to look for, to go through, right? So you look for more confirmations before you actually make your position, instead of going aggressively, because there are more, maybe more pips in there. You don't want to risk that much, depending on the size of account you have. So in this case, you see, in this particular scenario, the market actually reacted to the decisional and did not go all the way to the origin, right? You see? So let's see what other example I can give you here. All right, in this one right here, it's a bit cleaner, or yeah, I would say it's a bit cleaner, because we do have a break of a structure right here to the downside. The market did two moves, right? It's clean. It's very clear. You see the first move right here, aggressive sell, then a correction, and then another big move right here, right? The only thing that we can say, okay, well, there is no imbalance on this one. This one will do have some imbalance here, yeah, but this one does not have imbalance here. Maybe the imbalance was actually left here. So this can actually make the origin a bit more attractive than this one. However, doesn't necessarily means just because we don't have imbalance here, this is still not a good area. It is. It is a good decisional point where the market can actually mitigate and fail and fall from there. But in this case, the market went all the way to the top, to the origin, before actually dropping, going the direction you want. So as I mentioned, depending on the time frame, I recommend you go into smaller time frames and find confirmations, because I'm already giving you these examples on smaller time frames. In fact, let me see if I can actually see. I don't know how it's going to look on a 1 minute. There was a lot of indecision. Like you see, once the market, like you look at on the 1 minute how aggressive this break was. Like there was nothing. It was literally no orders right here. The market did not slow down at all. It did touch it once right here, right? But then the next two candles just burst through, right? And then from here in the top, the market was struggling a lot. It actually spent some time in there, but about 20 minutes in this thing, trying to go above. It did, and at the end of the day, actually ended up falling. So what you can do sometimes is spot a second order block where you can actually follow. You might actually be entering a little late, but at least you know that the market already rejected here, and now the direction should be to the downside. So you should be feeling confident that the market will fall. Now your job is to spot another order block while the market is going down. You can see that perhaps we have an order block right here. We have even at the top, when the market fell aggressively like that, you had an order block right here that never got mitigated, and so on. It's your job to, from that point, to just keep looking for that. Okay, so let me go ahead and jump to our last example, which is actually right here. We see that this move also, right? We did have a break of a structure to the upside, right? And we have it was weird. It was a little weird, this one, because there was noise here, noise. But then all of a sudden, boom, aggressive buy, then a pullback, then a break, right? That break happened very aggressive as well. After that, look at what happened. So market created the decisional, or POI, right here, and also the origin at the bottom. We do have imbalance here. We do have imbalance here. So you have all the confluences. If you want to use, same thing, just to look for more confirmation. Is it going to be right here? You see the two order blocks right there, the two zones are in the discount area. And so you see everything is looking nice. Everything is literally looking nice to jump in. So which one should I take? In particular, which one? We don't know. Remember, if this one did not have any type of imbalance, maybe it makes it less attractive. Maybe you can risk less this trade, but and depending also on the time frame you're located, you may need to go in smaller time frames to look for more confirmations. Okay, like one of the confirmation could have been here. Like you see this when the market reached this area, right? Immediately reacted, strong push, right? That's literally creating another order block right there. It created this order block, right? That you could have taken. Maybe you did not take this one, but now you entered on this one. That's almost the same risk in there, depending on what you're doing. If you are trading at the 100% of the order block, or you're trading the 50%, right? The market did went down and mitigated the 50% of the OB. Your stop were right here, and your take profit at this point. This would have been a nice what 1 to 11 risk to reward. Okay, but at least you waited. You see what I mean? You're on a 1 minute, and you just simply wait. So you waited. The market did react really nice, consolidate a little bit. You see it built up a second order block. So you had one order block here, and the market created a second order block, and you jump in on that one. That's basically a confirmation. So with this, guys, I'm just giving you really cool tips here that I hope you don't take any disadvantage of this. Just take the most out of this content, guys. If you really like this content, give it a big thumbs up. Subscribe if you're new on the channel. More and more content like this coming up on smart money concepts. I know this is very helpful for you who are just starting into this business, and that's basically it, guys. Again, give it a big thumbs up. Go watch my website, teamprofitsenglish.com. You'll find out a bundle right there. I'm offering a bundle with a 35% discount. I normally offer cool discounts there for my students, so you might want to check it out. All right. Thanks again for watching, and I'll see you in the next one. Take it easy, guys.